What's up, guys? This is David, aka Reverse Long, and today I have Jack Schwager and George Coyle on the podcast to speak about the Market Wizards Next Generation book. And this is exciting. I've had Jack Schwager on the podcast a few times already over the years. And when I was getting started in my trading journey, I started to have initial success 2021. I devoured all the Market Wizards books, every single one. Even like the small book of Market Wizards, like the little pocket size one. So, and I got them all in audio. They're great. So like it's exciting for me to, see the new one come out because I know a lot of the traders on there. So it's like exciting to see that. Like, wow, I've had a relationship with these traders. So now it's very inspiring. And for me myself, it's been great through my journey. I got to get signed by the same publisher as Jack and George over here with Harriman House. And yeah, I wrote a book too, Short Selling Masters, coming out in August after Market Wizards. So Market Wizards comes out in June, I believe.
Yeah.
And we're here to talk about it. So it's going to be very exciting and very exclusive podcast. So first, we have George new on the podcast. So George, maybe you want to introduce yourself to us. I know you're the co-author of the book, The Market Wizards, and you've been very active on social media. And yeah, it's very exciting.
Yeah, thank you. Yeah, lately I have been active, but my background is really sort of working on the buy side for hedge funds, CTAs, family offices, things of that nature. And throughout the years of doing that, I would study different traders, read the Market Wizards books and other books just to basically try to improve my own process, whether I was trading or designing systems. And not wanting to redo the research, I didn't want to read 20 things again. I started to write papers, mostly for myself, just to aggregate the wisdom. And I decided to just publish them out there for free to share information with people and connect with people. And ultimately, the short version here, the longer version is actually my preface in the book, but the short version is those papers led to meeting Jack and co-authoring the book. So that's the quick and dirty on me.
Awesome. And Jack, just a quick background on yourself as well. I'm sure everyone knows who you are, but yeah, just you want to introduce one more time?
Yeah, well, just very short. Um, Basically, what I'm known for is best is the Market Wizard series, which with this new book will be the sixth volume, and not counting a little small volume that you mentioned, the little book of Market Wizards, which is just my prose version of highlighting some of the key points. And besides that, I've written a number of analytical books. The most recent one being a revised version of my first book, which was a complete guide to the futures markets. And that's my main, so my main claim to fame is through the writings. My career, in a nutshell, which I haven't, I'm no longer, I'm sort of retired from any other active activities, but I was a research director for a number of major Wall Street houses in the futures markets for about 22 years. And I was with a hedge fund advisory firm for 10 years. And those are kind of some of the other things I've done.
Excellent. Now, so Jack, how did you get started with writing? And was like your first, okay, so your first book was the Futures book, and then the second one, the Market Wizards, was that the second one? And it just
That was the
became a
second
big
book,
hit.
right? Yeah, yeah. So the first book, this is back in the early 80s. I was uh, I was a futures director of futures research. And when I came into the industry about 10 years earlier, when I was looking for stuff, there wasn't really much good stuff. And even in the early 80s, I didn't think there were any really comprehensive good books on futures market analysis. So I thought I could do a better job. And I decided to take a sabbatical. I took a year. This is pre-PC, so there was a lot of work involved. And I took that year to write what my aim was to write the best book on analysis in the futures markets. Was half fundamental, half technical.
Excellent. And then
Oh, that was the first book. Yeah.
yes. And then the Market Wizards, like what got you to write the Market Wizards and why do you think it was so successful? Like was it successful like right out of the gate?
Yeah, it was. Actually, it was too successful in a way for its own good. Um, when it came out, there was an article in the Wall Street Journal about the book, and it sold out immediately. And I had a publisher that shall remain nameless. My many among my many negative experiences with publishers, and took them months to get the book back in print, which was which was a really shame. And so it lost a lot of esteem. Still did fine, but and then of course it kept on selling year after year after year. But the initial thrust, they just completely blew it. Like I say, it was sold out immediately, and then were no books for a while. So yeah, that was my first experience with
Very interesting.
you
So
know,
why do you think that was? Because back then, this is we're talking about the 80s or the 90s?
this is the book came out in '89. I wrote it in '88.
89. Okay. So why do you think that was? Because retail trading didn't really exist much back then. The brokers, the commissions were too high, and it was just too hard to do. You didn't even have like computers like we do now. I think maybe very few people had computers. Um, so it's very accessible now. So it's just really interesting to see. So it sold out immediately. So the public just very curious about these traders that were wizards that came out of nowhere. And then I want to get your thoughts on comparing to that now where everybody has access to trading and you have people from all walks of life that learn trading. I know several of the traders in the next generation of market wizards. Um, they started like at 12 years old, one of them. Another one traded professionally at a firm. And then, you also have your previous book, The Unknown Market Wizards. Like, this is just, it's the same, but also very different because it's just like even myself, like I'm trading very actively every day. So, like, what do you think the perception with the public? So back then it was like a curiosity of like who's really doing this? I don't know, I'm imagining. Versus now it's like everyone wants to learn it for themselves, like get the book so they can do it themselves and they can
Yeah, well,
easily do it.
yeah, that the first book is before your time. So, but there was still a substantial amount of trading activity and interest even back then. Yeah, you had higher commissions, although commissions had already come down, I think, by that point. Uh, Not the way they are now, but and you did have you did have, I guess, the early days, the beginning days of PC availability. So there were things that were working to expand the trading audience. But moreover, well, I think it was also word of mouth. I think traders who read the book recommended it to other traders, and that aspect of it, the fact that it spoke to traders in a real way, in a way that rang true to their own experience, I think made a big deal. And then there's what you raised, which was the human aspect of it, the idea of here are people who came from nowhere and built fortunes trading, and in some cases there are stories where they blew up a couple of times along the way and still managed to succeed. And I think that that struggle from failure to success is a universal interest story, and I think it helps all. I think that's there in all the Market Wizard books, and I think it's one reason why they do well is not that they don't only appeal to the trading audience, but that people with some interest in finance and certainly interest in failure and success.
Yeah, absolutely. I think in one of the podcasts that we did, it might have been the first or the second one a few years ago. You mentioned Michael Marcus, the first market wizard. I believe he's the first one. He
Yeah,
blew up the first
first chapter,
chapter.
first Market Wizards.
And from what I recall, you spent some time with him was it in Santa Monica? No, right?
It was a Malibu.
Malibu.
He had
And,
Sylvester. He had bought Sylvester Stallone's house just for background point of interest. So that's where we had the interview. That and then walking on the beach and so forth.
yeah, I remember our conversation. You mentioned that it took him like 10 years to get profitable. And I think you mentioned he borrowed money from his mom and then blew that up and then made it back.
Yep. Yeah.
So,
So I mean, he was he was the classic case of multiple failures and ultimate huge success.
so
And the worst failure was that uh, he finally started to succeed, got overly cocky on one trade, didn't have the risk management at that point in his career, and had it all riding on one idea. And basically, he was essentially long corn. Uh, and there was a situation where there had been a blight, and that was the year he made a lot, first made money in the markets. And then there were stories that the blight could carry over to the next crop, and he was like even positioned even larger going into that year. And then one day there was a news broke, and there was a story. What was the Wall Street Journal? Some other financial paper, I don't forget. But the gist of it was, more blight on the Board of Trade floor than in the fields of Iowa, and the market went limit down immediately. He couldn't even get out. Basically, blew out his entire winnings, plus a good part of his mother's savings, and he came from a lower middle class background. So that was a kind of traumatic event.
Yeah, that's a story that a takeaway that I remember from 4 years ago. I don't know if it's mentioned that detailed in the book, but I remember I had a lot of curiosity about Michael Marcus because I could relate to his struggles at the time, and I know I got feedback from that. Um, because people ask me, "Oh, how was it? How was the Market Wizards?" And I always tell them that story about Michael Marcus
Yeah.
overcoming those early issues because it's very relatable. Now a question there. So I've encountered over the years, over the last few years, a lot of these futures traders. Everybody wants to be a futures trader with like a very little money, with $100 or whatever, and they're tackling these trades like with support and resistance. They're really like no edge except like support and they're almost like just playing around with like a hobbyist. Now the market wizards though, I always think about the market wizards like when I think about futures traders or whatever, because a few of them were that, and they did it at the highest level. So from your interviews, were the futures traders that were market wizards, were they doing like that, like going by news and going by a thesis, like the blights and going by other things rather than just technicals? Because I think these days a lot of people just approach futures. I don't trade futures, but like I imagine that there's better edge doing like are there market wizards that just trade futures with technicals basically, or like were the market
Sure.
wizards that traded futures, were they using other things to form a thesis and like trade it like the way Michael Marcus did?
There are market wizards who trade those of who trade the futures primarily. Among that group, there are those that were purely technical. There are those that were purely fundamental, and there were those that were kind of a mix of the two. But there were certainly ones that were purely technical, like maybe the most famous one, and I guess famous probably because of the book. The first Market Wizard book is Ed Secoda. So he was he was purely technical uh, and initially systematic, although I suspect that there was a good deal of discretion thrown into that systematic approach. Because a
Very
pure
interesting.
systematic
So
approach couldn't get his results.
so I remember we had a discussion too about systematic versus discretionary, because at the time I was confused about it. I was earlier in my career, and you mentioned that I think only one market wizard was a quantitative or systematic, which was it Ed Secoda?
Well, that we may be talking about a particular book because there were a number that were systematic over the course of the various books, but in any particular book, we probably spoke on the last book uh, and Unknown Market Wizards, and in that book there was only one systematic trader who traded. Yeah, and he was a futures trader, so there was only one systematic trader. Oh no, there were two. No, no. The one that was purely systematic, actually, the one that was 100% systematic was actually a stock trader in that last book.
Wow. Okay. Because I remember you said when you were looking for market wizards, you're looking for dramatic performance, right? Is that
Yeah,
yeah? So
one of two
dramatic.
things. I'm looking for either someone who took a small amount of money and turned it into a small fortune or a large fortune, depending what your perspective is. For example, in this current upcoming book, there's one trader who literally took a $5,000 account into what is now 500 million.
Wow.
So
Yeah,
yeah,
that's
so
dramatic. So that's
that's
what I
that's
was leaning into. Okay, so with the next generation of market wizards, was there more dramatic performance than the previous market wizards? Like the rate of of dramatic performance?
There were a few traders in this book that had um, records as good or better than anybody that I've ever interviewed. Now, uh, they're not managing tens of billions of dollars, and in a number of cases, they're particularly limited. So I was going to say there were two ways. One is taking a small amount of money, turning it into a huge account. And the other way is just a credible return to risk. So there's one trader in this book that hasn't had a losing month. I literally got the statement, so it's not like we're taking this stuff on faith, but hasn't had a losing month since for at least 11 years that we can verify. And prior to that, he was managing family office money, so there's no record that can be ascertained. But we have no reason to doubt him. He was completely straight about everything else. And as far as he relates, he didn't have losing months there either. So probably going on like 15 years of not having a losing month. Now he didn't make a lot of money. He just made like 300. Let's call it 300,000 a year. That he lived off of. But it was like a money machine, like no losing months. So that's pretty spectacular.
Wow. And George, how did you guys connect? And were you the one, or like how did you guys go about verifying the traders and finding them?
Um, I guess we could talk verification first. So no two traders were exactly the same. We looked at their statements. We often looked at tax documents, but in the modern era with AI, it's harder because people can, forge or fabricate documents like they couldn't before. So we basically created a 20-factor model that we looked at, and we went to various lengths depending on the trader, but we would always look at statements. We would generally look at tax documents. In some instances, we would ask the traders if we could speak with their brokers so the brokers could confirm the results, and that happened a handful of times. In one instance, we had an auditor come in because it was sort of forensic accounting that was a little over our or my skis, and so they came in and helped us to finish. But yeah, I mean, it differed based on the person, and it's like, are they in the United States? Are they not? Do they have a known broker? Do they have multiple brokers that we don't know? Do we know people who know them? All of these things sort of went into the equation, so it wasn't just a one size fits all, but we definitely did a thorough job of vetting all of them. So as far as finding them, there wasn't really one way, and that relates to this originally started off as a total different book idea, and it morphed a couple times until it became what it is. So we picked up some people from the original book idea, and then we picked up some other guys as it changed, and we asked those people for introductions. And then we would talk to certain podcasters and say, "Do you know people?" We also put basically through FundSeeder, we had them put out a cattle call, essentially, for lack of a better phrase, and a bunch of people submitted their information. We went through it, we talked to them. So it wasn't like one way. There were multiple avenues that we used to find the guys for the book.
Excellent. That reminds me. So a few years ago, a couple years ago, I was Business Insider reached out to me and they wanted to do an article like on successful traders or a trader series, and they were having such a hard time verifying people. And everyone that they interviewed, they would recommend other traders, and they just couldn't verify. And the Business Insider journalist told me, "There's so many fake traders out there. It's not even funny." And the verification was like, it was the craziest verification process. It's exactly similar to what you described. The broker statements, the tax, they interviewed the brokers, they interviewed the journal, the online journal uh that I have. They interviewed the creators of that journal, the CEO of that journal, and then they threatened to sue me if I'm hiding anything. Did you guys go to any lengths of like was there any did you have any so I guess my question is, when you were verifying traders, were there some that like almost uh got through, but then it didn't get through? Like how many people did you have to go through and like to get you? And then when the traders that you verified, how did it get like I guess you use FundSeeder? Is that the one that just got you like that 100% confirmation? Or yeah, how did you guys go about that to like thoroughly verify it? And I'm sure you probably got so much because Greg, George, I think you got so much attention on X, like you must have got like swamped with people to verify.
Yeah, well, the process, I mean, I guess I just outlined for the most part. And to get 100% there, we say this in the book, like you can get 99.9% of the way there. You can't get 100% of the way there because there are things that could happen that there are games that people can play that will pass all audits and scrutiny. And we don't want to talk about them because it would kind of provide a roadmap to potential bad actors. But we came away very confident that the people in the book are legitimate. And we didn't threaten to sue anyone. If it wasn't the case, I guess the people you spoke with went a little farther than us, but ultimately we went through it. We went through the information and we got to the comfort level where we could put them in the book. As far as other people, yeah, there were definitely traders that we talked to. There were sometimes you would talk to people, you'd ask them for documentation, they wouldn't follow up, and that's kind of where it ended. And you don't know exactly what happened there. But one of the things, as an author, I mean, maybe your book's a little different, David, but writing a book's a little like cooking. You can't just do salt, 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 salt. You got to do salt, pepper, different ingredients. So sometimes we would talk to people that I think might have qualified, but then, you have to look at if two traders are doing something very similar, what is the narrative? If the results are similar, like are they doing the same strategy? Are their stories different? How does it fit with the whole book? Does someone decide down the road they want to drop out? And so all of these factors play a role into what the ultimate book becomes, including the fact that, as you probably know, the editors and publishers are saying, don't write a 800-page book. So it's not necessarily just like, oh, geez, these people got kicked out because they weren't right. It becomes, I guess I'd say, more complex than that. There's more factors that play in terms of who makes the final cut. I would say, and Jack, maybe you could speak to this too, but it wasn't like we had 100 people to whittle down from. I'd say maybe there were 3 to 5 other contenders that for one reason or another, it just didn't wind up becoming part of the book. Does that sound right, Jack?
Yeah, I don't remember an exact number, but let's say from Fund Seeder as an example, I think we maybe pulled 25 possible names, uh, and then there were various reasons people get knocked off that list for a number of reasons. The easiest, maybe their results were good, but they weren't good enough, uh, or they they made the money in like 3 years time or something. It was just too short of a period, and it didn't speak to a long. You needed a longer track record to make sure it wasn't just a fluke. Couple of years that they were very lucky or whatever. I mean, there was one guy who had a really interesting story coming from a different country and starting with nothing and then building it up. And various aspects sounded interesting, but when I forget exactly what the specifics were, but when we looked at the actual record, it seemed like he had made he was just like trading with extreme leverage and sort of made a lot of money, then had a huge drawdown, then made a lot of money, had a huge drawdown, and it's the type of record where maybe he was on and up again, but it wasn't the type of record that uh, generated long-term confidence. So while the ending number might have looked good, you could see like 6 months from now it might be completely different. So there are things of that nature. Yeah, you'd come up with different reasons to exclude different people. And as George said, some that look good, and you said, okay, you'd have preliminary conversations, and okay, send me your send me all your statements, and you'd never hear from them again.
I see. And did you ever think you were gonna write a newer version of the Market Wizards? Or like how did this come about? Like did you just get presented with so many outlier performances, you're like, I gotta do it, you know? How did that go,
This
go?
book, David, this book in particular,
Yes, this one.
yeah. Well, this book is George's fault, and he yeah, just he didn't go. The preface in the book, the preface that George wrote, we each wrote our own preface, does cover the whole story. But in short, he had been writing articles on different traders. And we had a mutual friend that introduced us and asked me if I'd be willing to look at his stuff, and I said sure. And George sent me a couple of articles. In particular, he was at the time working on. I'd written an article on Marcus, and I was probably the one who knew more. Knew Michael more directly than anybody else. Plus, I'd written about him, and so he asked if I would look at it, and I did, and I thought he did a good job. And he had an idea for a book, and I said, "Yeah, that sounds like it would be a good idea." And look, I can introduce you to my. He wrote well enough, so I felt okay to introduce him to my editor, and which he originally turned down as a when I offered it. But I kind of gave him some back kind of background tips and some comments about the articles he'd written, and wished him well. And but things went from there. Without going through the whole story, uh, it went from my saying, you know what, I can contribute a little bit to your books. Maybe I can write an end. I can write the summary, something in the summary sections of each chapter. And it ended up, well, we went to my editor, and he really wanted he really thought that should have live interviews, not just research on people who in many cases were no longer alive, which was the original book that George was working on. So we ended up doing another Marco Wizard's book, basically.
Wow, incredible. So, I know some of the market wizards, and we'll speak about them in a moment. However, like so because I was aware of a few of them, like for example, the Short Bear and Lance Breitstein on the internet. I follow them all the time. And I've seen the Short Bear over the years. Even there's like some old YouTube videos of like when he was starting in the small caps or starting to have success, and like that's what I trade. So and then to see his growth now, like oh my God, it's crazy. Um, and these guys would read the market wizards, and now they are a market wizard. So it must be like surreal to them. Because I know like when I first read the market wizards, I was like, it was just so far out of reach. It's like, how do you even imagine like and I'm sure they had that experience too, because they're, so and then now to their market wizards. And like we didn't, I'm sure that for them as well, they didn't know if there's going to be another book of the Market Wizards. I thought it was like retired, it's done. So like that must have been such a great accomplishment for them. So how was that like the reaction from the traders when they're selected to be the Market Wizards, the next generation?
Uh, George, you have a comment on that?
Well, we flew in with bouquets of flowers and confetti. No, I'm kidding. I think they were. We did most of the interviews over Zoom or some other, video conferencing. So it's hard to say. I mean, I guess I remember one of them saying, "Oh, this is really happening. Wow." But I guess I would say you probably have to ask them that question to get their genuine. You're just getting my or Jack's interpretation, but none of them was mad, I guess I would say. They all seem to be pretty happy.
And how many Market Wizards in the next generation are there? How
Nine.
many?
Nine.
Nine.
Yeah.
Okay, nine. And how many how many Market Wizards in total?
What, across all the books?
Yeah.
Well, nine is probably maybe towards the low end, I think. A number of these chapters are on the longer side. Um, so nine is on the low end. I think maybe the high end would be about 15. So let's call it a dozen on average. So across the six books, a little over 70.
Wow, okay. Okay, and now to get into the market wizards themselves. So, okay, so what assets do they trade for? I know some trade stocks, just everything. You did the same thing again, like forex, futures, stocks, covered everything, or
Yeah,
how did you guys?
this book, they're basically stock traders with one exception who made the initial few hundred million trading futures and trading future spreads to get even more esoteric. And specifically, and that then branched out to stocks and long side of stocks. And but he's the only one of the group. I'm thinking off the top of my head that was futures predominantly, and the others I think were basically all stocks. I don't think any of the others traded futures at all, and no currency traders per se. although futures and currencies can obviously overlap. Um, so that's yeah, so that's it. So I guess much more heavily stock oriented on this on the most recent book.
Gotcha. And were these were the nine market wizards, what background did they come from? Like institutional? I know like Lance traded at Trillium, for example. Short Bear started at his own at 12 years old. What about the others? I don't know, maybe if we
Yeah,
could mention some of the
a few of them came from what you call institutional. I wouldn't call it institutional. I would call it prop firms.
prop
So
firms.
a few came from prop firms. Uh, I guess the majority were probably just solo traders on their own. Sort of got into this, just got bigger and bigger, and yeah. Oh, and the one I mentioned that didn't have any losing months. He he did work for uh, uh, again, it was a prop. I guess he did start out for a prop firm as well. So I would say he was either pretty much in all cases they basically started with prop firms or as a trader with a prop firm, and or they just started completely solo.
Well, there was Kelvin Chu. He started with Goldman Sachs and traded for a commodity firm. And Rick, who he actually was a banker initially and didn't like being a banker. He wanted to get closer to the action, so he wound up at a prop firm. But yeah, I think the backgrounds were there was a lot of prop, a lot of independent guys, and then a couple guys who had came from more institutions, but it really wasn't primarily an institutional background oriented group.
Great. And so my question, okay, so after hearing that, like, okay, I'm interested in knowing like how did they start? How did they learn to do how did they get their started with trading like the education side? Because I know prop firms they give like some education and you got to follow their rules or else they have a risk manager that will take you out. So that's so like their risk management is kind of contained, but then the guys that switch to their own trading, like how did they get started like that?
Can I take this one?
Yeah,
There's the line from Reminiscences of a Stock Operator where the Livermore character says, "The game taught me the game, and it didn't spare the rod," which means, the game smacked him down. So I think a lot of the guys in this one, there were some that traded for prop firms, so they had to sort of, guardrails essentially and implemented risk management. And some of the ones that came from bigger firms that did the same, I guess the one guy in particular. But a lot of them blew up multiple times. And so I think they just learned by failing essentially. One of the guys, Christian Kulamagi, and actually his
That's
chapter is
right.
available. If you pre-order, you can download it from the publisher's website, his chapter. But he blew up, I think was it three or four times? But yeah, we asked him like, why'd you keep going? And he's like, well, it kept taking me longer to blow up, so I figured I was improving. So I think that in a lot of cases, it was just kind of like sticking a fork in a light socket, like zap. Well, that didn't work. Let's try this socket, zap. And they, by virtue of finding what not to do, they eventually found what to do to succeed.
but to get to the heart of your question, basically they, for the most part, almost all of them, they just really developed their own methodology along the way. Not not immediately, as George said, there were a number of failures typically along the path, but they developed their own methodology. In some cases, that methodology may have gotten an early some boost, like in the prop firms. Lance talks about speaks. He no, everybody wanted to be in New York, and there was an office out in Princeton, and the firm's best trader was out there, so he volunteered to be an assistant there, and so he learned a lot of the early techniques. He was able to pick up from a mentor, so to speak. But that was, I think, more the exception. And even then, of course, he developed his own methods. But so I'd say largely self developed.
I see. And George, you mentioned Christian Kulumagi. So I know him as he's like a long bias trader, I believe, and he swings the stocks and he has like free information on the internet he's been doing for many years. Um how did he start and how much did he make? Was he the guy that you're referring to from 5,000 of not 500 million? No, it can't be,
No,
right?
no, his peak was just above 100 million, and then he had a drawdown, a good sized drawdown. So he was not one of those over two I was mentioning. Um, I'm sorry. So what was the gist of your question just now?
So, okay, how did he learn? He learned, oh, okay, so
Oh,
he had that big blow
he
up.
learned.
So how
He
long did it
learned.
take him to blow up first? And then like,
No, actually, Christian's interesting. He learned from social media, believe it or not. He has basically three primary types of trades that he does, which we describe in the chapter. And he was pretty, like he is on his social, or was when he was doing it actively, he's pretty open on what he does. And he described it. And he's very insistent on saying, and I think this is a verbatim quote from the chapter, uh, I or close to verbatim, basically saying, I invented nothing, you know. So he basically he learned the types of trades he's doing from others and gives them credit and basically says he just utilized what he learned from them. He didn't invent any new type of trade or come up with anything original on his own. It's in his own words. So as hard as it may be to believe, but here's a guy who did go from 5,000 to, in this case, a peak of 100 million. Basically, just learning stuff off the internet, and of course, ultimately applied it with. He should say here that he just did a tremendous amount of work. I mean, he was like living, eating, sleeping stocks for years, 15, 20-hour days even. And so it's not just that he picked stuff off, but he did a lot of his own research.
Can I add to that? Is that
absolutely.
um, I guess two things. One, he took the 5,000 to 100, 5 million, I think was the peak. And he did take a drawdown and he talks about that. But one of the things that I think we don't say enough is the traders were in different tax havens, essentially, or lack of tax havens. So you have to keep in mind he was paying Swedish taxes as he went, which is essentially ordinary capital gains tax rates are thereabout. I mean, I don't know the exact tax rates, but it's not 5%. I think it was close to 30 or 40. So if you think about that, it's like that 100 would probably have been much, much higher if he was in a tax haven for whatever that's worth. But the other thing that he said he did a lot of was just looking at charts. And Phil Goedeker, who's another trader in the book, said the same. So I think one of the ways that these guys learned was just looking at markets. And it's interesting to me because I've always studied traders and I find the commonalities between the traders. And when we interviewed these guys, I was just kind of taken with, well, they studied traders, but they also just studied the charts. And what do the charts tell you? What patterns persist over time? And so that's one of the big ways that they learned was just looking at the charts again and again and again and letting, I guess, in a way, the market teach them what to do and what not to do.
Yeah, screen time is so important. However, these guys take screen time to another level. Like, I can imagine how much time you gotta stare at the charts. So they coming up, but Christian said he didn't invent anything. So this is just patterns that everybody knows pretty much. He's calling them out a lot of the times in his YouTube or in the past, and he's sharing all his knowledge. And even with the book shares all your knowledge, all the knowledge. Uh, the history, the Market Wizard series shares a lot of knowledge. So how come some people they can you can give them everything that Christian has, and they can't execute like Christian does? So why do you think that is? Is it because certain innate things going on with everybody uniquely, like personalities? Because if you give everyone exactly what the Christian's playbook, Christians, even if Christian's right there telling you to go in and out of the trade, and they just can't execute like he does. They can't turn 5,000 to 100 million or whatever.
Yeah, well, because the Christian ultimately gravitated down to, let's call them, three different types of strategies. Those were ones that worked well for him. He believed in them. He had done enough research to have confidence, and he had the emotional makeup to execute when he had to and get out. Well, with some exceptions where he did make mistakes. get out when he needed to. So that he just had the right makeup and devotion to make these strategies work. But a lot of people may come to it, and every strategy has a fair number of percentage failures. So people may try it and then they lose on the first couple of trades and decide, oh, that doesn't work, or it's not for them. So they may not have the same faith in those strategies. They may not have the emotional stability or the emotional makeup, I should say, not stability, to trade that particular type of strategy. Uh, whether it's because of whatever risk exposure is implicit, or maybe what they believe, or anything else. So you could give people successful traders strategies, and they're still not going to make it work because it's just not a good fit for them. So that's the main answer, I think.
Yeah, because a lot of people expect to make money. Like when you mentioned, George mentioned the study time that Christian put in and Phil Goediger with all the screen time. We're talking, you mentioned 15 hours a day, Christian Kulamagi. Like people don't understand the amount of work it takes. I know because I know how much work it takes pretty much because I went through that myself. I still go through that, working so hard. But people come into trading because there's a very low barrier to entry, and they read these books and they want to get profitable in 3 months, 6 months. And I think Jack, you have that famous quote. I don't know exactly how it goes, but gist of it is like, a brain surgeon studies for like 10 years and you can't, and then gets to operate on the brain and they make a certain amount of money. And then a trader comes in, wants to learn in 3 months, 6 months, and make more money than a brain surgeon. I don't know, you want to maybe,
Yeah, well, yeah. The kind of analogy I use is you could, you could have, and if everybody would agree that no sane person would kind of go into a bookstore or go to a medical book section, find a book of brain surgery and read it and believe they can go in the next morning and perform successful brain surgery. I mean, no sane person would think that way. And the contrast I draw is the trading, where you could think of lots of people who would go into a bookstore, pick out a book like How I Made $2 Million Last Year, or whatever it might be, and in the markets, and then read it over the weekend and think they can go in Monday morning and beat the professionals at their own game. So there's such a contrast in the way people think about any other profession versus trading. And I usually pose it as a paradox. And why is that? I mean, why is there this bifurcation between the way people think of all professions versus trading? And there is actually an answer to the paradox, which is that trading is the only profession where a complete amateur, a complete novice who knows nothing, could be successful for the short term, because there's only two things you can do: you could buy or sell. And let's say it's a bull market. Let's say you have a good bull market going. Somebody comes in and without any skill or knowledge is picking long positions, and they're working out, and he's making money, and thinks that they're a genius. Well, that can happen for the short term. I mean, ultimately, if that's all there is to it, they'll lose. They'll eventually lose money. But that's not true of any other profession, right? So brain surgery, there's if you haven't been trained to be a brain surgeon, the odds of you doing that successfully are zero. If you've never if you've never played a musical instrument, the odds of you taking a violin and playing solo with the New York Philharmonic successfully is zero. So, like any other profession, people understand you require skill, experience, lots of years of training, lots of hard work. Now, trading is really not different, but it's the only profession where even with none of that, you could be successful for the short term. And it kind of fools people to believe that trading is a lot easier than it really is.
Yeah, so one of the things I had personally for me, going for me when I first started, is that I didn't know anything about the stock market, but I knew about my previous career as an architect. And to become an architect took me like 10 years. And then I decided to pivot and do trading. So I came in with the mentality of I got to build a skill that's gonna replace architecture and it's gonna take a lot of work. Um, so many people they're just confused with that. I don't know, maybe it's the internet and YouTube and all the flash and what do you know all the fake gurus, they call them fake gurus out there with the flashy jewelry and the Lamborghinis. So my question is, did the market wizards, the next generation, did any of them start out confused like that? Did any of them start by trying to make money fast, and then they changed, they said, oh, wait a second, this is not how it goes. However, I guess they got introduced to trading like that and then quickly shifted to study and rigor.
I don't think, George, you can answer after I do on this, but I don't recall anybody who took a cavalier approach. I think they were all very serious from the beginning, and uh, and I don't think any of them assumed that it was going to be like an easy way to make a lot of money quickly. Um, so I don't think, I think they're more similar to what your experience was, your your personal experience was. George, do you think of any exceptions?
Yeah, I remember Lucas said he thought it would be an easy way to get rich fast, and he really quickly learned that wasn't the case. But yeah, I think most of them took it seriously pretty early, and they had the big ups and downs. So yeah, I guess I would say for the most part they took it seriously from the get-go.
And Lucas, so Lucas started, such an interesting one. So he started at what age? Was it 12?
I think he
Yeah,
was
they're 12,
13.
13,
So
yeah.
how did that go? How did like someone get started? That's
Well,
very,
he didn't do much trading during those high school years. He and his accounts were small, so he had money saved up from birthdays and things like that, and in some cases sold his own, like sold his bicycle to get more money and things of that nature. But he was trading, so each time he gathered, let's call it $1,000, give or take, and he eventually lose it, and take him a while to get more money and do it again. So he did trade a little bit. He did trade during those high school years, but uh, it didn't amount to much. And his real trading began basically as soon as he graduated high school. High school.
I see, because
And interestingly, and this is, I know, the only time this ever occurred in an interview with any of the people I interviewed, his motivation, his motivation for trading, according to him, was that he, for reasons discussed in the chapter, he wanted to get out of school. He didn't want to be in school. And he thought if he could make money trading, he could quit high school. So I told him he's the first trader I have interviewed who got into trading so he could get out of finishing high school.
so interesting, but he finished high school.
He did. He did.
Okay. Yeah, and so how much do you think that has to do with the success? Because like getting an early start to see those charts perform, maybe he didn't make any money, but just to see all those
Yeah, he
charts
had
on.
experience. He was serious about following the market even then. And there's something else which I've noticed now uh, for a while, and for the last few market wizard books at least. I kept on noticing that a number of traders kept on referring to a very early interest in trading, and I think people who are genetically inclined, let's call it, to get interested in markets in high school uh, have a better chance, I think, of succeeding. That's kind of a tell for me that there's something about them that is just geared to potentially being a successful trader. And I've seen that a number of times. I remember Steve Cohen talking about uh, going just during lunchtime, going in high school, going to the brokerage firm and watching the ticker, the boards, the stock boards. Uh, Michael Platt talking about, I think it was his grandmother who invested in a little bit of stocks and gave him some money to trade. Again, these are people doing this in high school now. So I think that is like I said, a tell that somebody can be successful. So those people listening out there, if you got interested in the markets in a serious way as early as high school, that's a potentially good sign.
Okay, that's great. I know. So the reason why I was asking the question because I started trading at 32 years old, for example, and before that, I didn't know anything. I didn't even know what a ticker was. I was just financially illiterate. But when I first was starting to learn, I realized, okay, I'm gonna have to do like 20 years of work in like 5 years or something like that. So I'm gonna have to just work around the clock to study, study, study. So I imagine, like, when I was first reading, like, for example, Warren Buffett. Warren Buffett started, he's not a trader, by the way. He was actually, I think Warren Buffett did trade a little bit to start. He started early on. I don't know, maybe you guys know more than about me than that. But he started at like 12 years old or something, so, and Lucas started at 12 years old. So, and then you mentioned somebody, like, if you have an interest in high school, like Steve Cohen, so maybe that helps. But at the same time, now in hindsight, like, I'm a successful trader now, and I get a lot of young people reach out to me, and sometimes I bring them into my office who, like, for example, for my book, I was giving whoever has a pre-order can come to my office. If you're in LA, I'll give you a tour. And and this is young, sometimes 18-year-olds come, and I'm like, okay, or 17. I had one 17-year-old, and I'm like, what are the chances? And I have yet to see them. I mean, maybe not enough time has passed to see if they're going to be successful or not. But there's just a lot of quick, like, flash in the pans of, like, interest. I guess so much of that, and it's people can't. Trading is just so hard. It's hard to stay the course for so long. So, what do you think the odds are of someone's, because it's just so rare to see someone so successful, like, turn such a small amount to a massive amount, and everybody can relate to that struggle and that journey, but just so few are able to actually do it. But it is possible. Everybody can. It is possible to do it. So I don't know, what do you guys have to, what are your thoughts on just people trying to, be a market wizard?
Well, like anything else, exceptional outperformance is, I think, only going to be achieved by a small percent of potential candidates. It's like anything else. I mean, not everybody's going to be, a professional athlete if they're into any particular sport. Only you have to have the right, physical makeup. You have to have. I mean, that can rule out, a vast amount of the population. In trading, not so much physical makeup, but it's emotional makeup. And I think only a small percent of people may have the exact, the not the exact, but a type of emotional makeup that permits them to get to that type of achievement. So I think it's always going to be a smaller percent. But having said that, the ideas and the principles that these people uh, live by and can pass on in terms of advice with their own stories, those are meaningful to help anybody, whether they're going to be a market wizard or not, at least improve. So you can certainly get better, and you can certainly learn from uh, what these market wizards do, even if you don't yourself become a market wizard. I mean, if you just simply improve your own results, if you're trading the markets, that itself is a good achievement.
Absolutely. And I think that's one of the reasons why the market wizards is so successful as a whole, is because, it's like with trading, you just focus on improving, and you never know, just like, the compound effect of that, where it's going to go. And I think that's what happened with a lot of these market wizards. They just kept improving, 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 and then all of a sudden you look back, this guy's up 100 million or whatever it is. It's incredible what the stock market provides an opportunity like that. Do you know, maybe, are there any other professions? I can't think of any that you have that opportunity for exponential growth, like dramatic performance.
Well, I mean, obviously, uh, you know, and again, with very small percentages, music, uh, um, sports, music and sports, I would say, are two obvious professions where a very, very small percent of people, and music, sports, and I guess also acting, actors and so forth like that. So a very small percentage of the people in those industries will get that type of super success. It's a tiny percentage, but there are other industries where there is the possibility of that huge payoff.
Excellent. I think that's why, trading, it's like I read a lot of I follow like a lot of athletes. I like, for example, Kobe Bryant. I was in speaking with Tom in a conference in Argentina and in LA, and we always the topic of Kobe Bryant always comes up, and it's like it's so relatable. The work ethic, the Mamba mentality, the psychological approach. It's just so relatable for that like high performance of those fields. That's why, the 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 amount of money you can make is so exponential if you can get the skill and dedicate a lot to it. It takes like you got to dedicate your life to it. Um, Now going back to the market wizards, we're going to start to wrap it up soon. Uh, but you mentioned Phil Goediger. I think from what I understand of Phil Goediger, I don't follow too much, but I think he's a short seller, no?
He
For the most
was.
part.
He was. It plays. That's how he made his initial tens of millions. Uh, then he nowadays over the last number of years, he's more of an option trader, and in particular, to be specific, a short, short side of options, which I'd like to say here now, to anybody listening, I don't recommend that approach to anybody. Although, as Phil demonstrates, it can be. I mean, he has used it to make many, many millions, and without having any huge drawdowns. So it can be done successfully, but the fact that Phil has done it doesn't mean it's something that everybody should try. I think he's the exception that can make this method work. For most people, though, because by its very nature, if you're a seller of options, your upside is, I mean, the best you could do is the option goes to zero, right? So that's fine. But your downside is unlimited. Those particularly options where you might be selling options that have a delta of 20.20, which means that they must say move 1/5 as much as the underlying stock. But if you're wrong, that delta can go up to one, same as the stock. So you not only can lose money on the position, but it gets larger and larger as you're wrong. So there are things about the negative asymmetry of that approach that make it inappropriate for most people, for most traders. But like I say, Phil has made it work and in a sensible way. And anyway, that's what he does predominantly now.
Gotcha. And you said he started out as a short seller, made tens of millions. So why did he shift all of a sudden? It was just too risky, and then you wanted to do something else?
I think, as these traders, and this is the same story, and this is we were talking before we started the podcast, and I think you've already you're already anticipating that in some sense, uh, and that is the number of these traders started out short selling in small caps, in particular, and it's a strategy similar to what you use actually, and when as they got larger, it then became the, that strategy became too small for their size of the portfolio. They, I mean, if they spend all their energy and time and they make 10 million a year, but on the other hand, right now in some cases they're managing hundreds of millions of dollars. So the strategy is just it's no longer applicable. It's just they've outgrown it in terms of their capacity limits. And so they may still do it occasionally, but it's no longer a core part of their strategy. So one thing we did see in this book is an evolution of traders who started that with that strategy as they got bigger, moving off to actually the opposite side of the fence, long side strategies.
That's incredible. So like we all know in the markets you gotta constantly adapt and evolve. And so how was there like a new learning period during that evolution where it's like they're not making any money but they're learning and or like how are they going about that transition? Did they
I don't
mention?
think in general it's not like they stopped small cap and started something else. I think basically they were still doing small cap, but saw where things were going and started picking up experimenting with other strategies, and eventually got comfortable with those other strategies and got
Yeah.
big enough to just go
Yeah.
for this.
I see.
abandoned or mostly abandoned the small cap
Yeah,
shares.
like for example, from my own experience in 2020, I made my first, I don't know, six figures plus in the pre-market. And then that started to completely go away. And as I was trading the pre-market, I still would test out strategies in the intraday, and I was still learning intraday strategies. And then eventually, it just kind of faded away. I imagine it's something like that. And yeah, I'm going through the same thing right now. I create, well, not for this podcast, but it's like I'm still doing what I'm doing, but like I got another thing I'm building, and eventually this will fade away and play a lesser role. I imagine it's like that. Just
It is like that. It is.
yeah. Yeah, so that makes a lot of sense. Because the newer traders, when I first started, I would see this pattern with the bigger traders. They'll evolve to something else. And I'm like, why did they evolve to something else? They're making so much money doing this. But then it's like because you don't understand, your brain can't fathom like so much money doesn't fit in small caps anymore, and you got to do something else. You got to expand your strategies, go to mid caps. That's why I love the markets too, because the markets, it's like there's so much, you outgrow this one, there's still large caps, there's still options, there's still futures, there's still forex, and you see the example from all the market wizards that it is possible, and if you dedicate, you can, at the very least, you improve. You take something away, you improve, but like you have this ceiling that's it's there is no ceiling. It's awesome. And but yeah, guys, so to wrap it up now, thank you so much for writing a great book that I can't wait to read. And for doing it, because I wasn't expecting a Market Wizards a new one. It's a big surprise. And to see some of the people that I recognize, it's really inspiring. You know, it's so inspiring. So yeah, any last words, or how can people reach you? Any announcements you guys want to make?
George?
Sure. I'm on X. The website to get the book is too long and painful to say out loud. So my handle on X is a GFC4, and I've got a link tree that leads to the book where people can buy the book. And then there's another link that if they buy the book, they can get early access to the two prefaces, the one from Jack and myself, and then Christian Kulumagi's chapter. So I think that's probably the easiest way to find us or me. And Jack's easy to find anywhere. You just put his name in Google and you'll find lots of stuff. So
Awesome. Well, thanks again, guys. And yeah, I'll have this podcast up with all the show notes and all the information on the book. So grab it soon, and yeah, I will catch up. We'll do a follow-up podcast in the future.
sounds good. Thank
Yeah,
you, David.
I'll see you guys. Bye.